Hello guys, welcome to the Trading Parrot. Less than 1% below a new all-time high, less than $1,000 below it. So the question is natural. Are we gonna hit the long-term liquidation pulse sitting right above us? We're gonna have a closer look at the charts, not just of Bitcoin, but also I'm gonna have a look at Ethereum, what's going on with the Ethereum dominance, Bitcoin dominance, altcoins moves in the upcoming days, and of course we need to look into the general markets. I haven't done a weekend video. I'm starting to slow down. In the upcoming month there will be less videos, so make sure you take note, check the timestamps, because this video is gonna have a decent amount of alpha as you will expect. My last video was on Thursday. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And yep, can we get 1,000 likes? If we get 1,000 likes, I'll make another video very soon. Otherwise, I'm gonna continue enjoying my break. And yeah, 7 days ago I asked my audience what do they think after we were having a decent pullback 7 days ago, whether we were going to V recovery and go straight for an all-time high, or we're gonna continue down and fast or sideways. My preference personally was sideways. People voted the most for a V recovery and an all-time high, so congratulations to you if you were part of this 41%. So far it's looking like a V recovery. And if you are so good for trading, look up for a decent exchange to trade. You probably wanna get the option to do KYC or not, and Bluffing offers you that, and also 100,000 now with this new campaign that starts today up until the 7th of September. It takes only a few seconds to deposit and you can trade from pretty much anywhere in the world. The link is in the description. Now I'm noticing that the interest on Bitcoin is starting to hit up again. Of course we are right below a new all-time high, and we are seeing very similar attention into Bitcoin as of this 32 that we have recently. Currently we are at 35, and Ethereum attention is also peaking now at 20. We haven't been at 20 from pretty much December last year, and none of this price action has managed really to attract much people. You can see the last time we were at 100, that was in the previous cycle, and I think all coins are forming in here a bullish pattern. You can see that it spiked very early before Ethereum did around June. It managed to reach 57, and at the moment is within a bull flag, and I think that is thanks to Ethereum currently driving the markets. There are very substantial rotations of Bitcoin into Ethereum to try to take advantage of this current rally on Ethereum, and a rally on Ethereum means one thing, that eventually is going to spill over into the altcoins, and I think this pattern is currently confirming that case. Coinbase pump and dump, we have this in here from Martin. Let's see what it says. Price jump from 118 into 122k earlier today as investors pile in, but the Coinbase premium index flipped red after. You can see that pretty much every time that we see a positive move, an impulsive move, we get the premium being in the green. That is kind of a confirmation that we are still in the aggressive move, but very quickly as soon as we get into 122, this flip into the red, that typically coincides with a period of consolidation or sideways at the very least. So let's see how that can drive the market into a different direction, maybe just for short term in small percentages. I'm not calling necessarily for a top yet. You can see as well that in the past month Axel is here identifying that we are the most bullish that we've been. So price hasn't taken the highs before, but the advanced sentiment index is marking a new high, and Roman is here identifying on Ethereum this time that although we have taken the highs, and that is something that we should be appreciating, right, but volume is not necessarily yet confirming this move on Ethereum, and I think the volume is definitely gonna spike eventually if we hit the liquidity pools located around 4.5k. I think the tool on trading different is broken and is not showing properly where the liquidity pools should be found. It's actually finding more liquidity at 4.2, but I think at 4.5 was the epicenter of all the liquidity pools on Ethereum, because I've been tracking them from pretty much the first time we hit 4k, so I know they are there, and I think once we hit that we should be seeing the volume also spiking. Of course that will confirm with more confidence that we enter price exploration on Ethereum. Now if you are part of my Patreon, I've been making sure that people know that I am distributing Ethereum, and all the Ethereum that I managed to rebuy at the lows of 3.3 I'm now again distributing as we get to 4.2. I am willing to let it go if it goes mental into 10k, 10K. After all, there's no way I can tell that, but I distribute in areas of high likelihood of being great opportunities. After all, we held all the way down into 1.5. Why wouldn't we sell at 4.3, 4.4 and into 4.7? That's my last sell. After that, I just let it go. If you wanna go to 10K, I don't care. I'm a trader, not an investor. That's already a heck of a lot because it was a huge bag of Ethereum, mostly accumulated during the bear market anyways, so I'm good to go to trade on other things that represent better risk to reward. And a few things that we need to put on top of the table. Sorry to disappoint you that I'm not talking about bullish things only, but you know, these things call my attention a lot and I have it in the back of my head doing a constant small noise every day. And this one says US stock market is at its most expensive valuation since the Great Depression. I mean, the only one that we haven't taken out is the 1929, but now we are higher than the bubble of the 2000 in 1966 and everything together, COVID, everything. So watch out with that because that could hurt if it enters into a recession. I think we are dipping our toes already in recession territory, and always remember that before a recession, markets tend to rally. Now, calling a recession is absolutely difficult, and I'm not calling it, I'm just saying that risk of recession are very high, and if you want to stick your head under the soil and not listen to it, that's on you if it ever hits. The hedge funds have now built the largest short position in small cap stocks futures in history. That's another thing to take note. Now let's leave some of those stories of horror aside. We did the homework, we appreciate them, and we know that there is a very elevated risk in the market. We also know that we cannot expect that it's going to be overnight. We don't know when it's going to happen, but it should kick at some point. BTC opened with quite a big CME gap today. There's actually two CME gaps that we need to look into the charts. But let's appreciate what Dan is saying in here. Most previous gaps that were created did close within the same day, but this one moved a bit further than those. Yeah, fair enough. I agree with that. BTC is also close to previous discovery and all-time highs, which generally makes it run away with the gap more often. Yeah, it has happened that we did all the way up and then we came back into a CME gap way later with people saying that we will never go and close it. To me, that is something that must be built into the plan while I'm trading a short, which now I filled my second order at 121K, giving me an average of 119.3K, I think. I already shared the calculation with my Patreon community and the entries and everything. Unfortunately, since I'm taking a break, no one can join now, and actually they're gonna stay for 1 month for free because I'm gonna post way less. Only things related to my trade updates are gonna be there guaranteed with a slight delay, of course, but the rest of the value, for example, the live streams, I'm not gonna do it because technically I won't have access to good internet. So I recommend to keep an eye on this gap. If price were to close the gap, it could make for a decent reversal area. And I agree because we're gonna do the analysis of the CME gap. I'm gonna show you what shape we can see if we feel not just the first but the second gap too. But generally, I wouldn't fully bet on it closing until price gets at least within a 1 to 2% proximity again, meaning, for example, breaking below 120K. So we got 3 news that we need to cover. One of them I already mentioned. Let's go with the top one with 8 out of 10 bullish. This one says the US order allows crypto in 401k plans. This opens a new multi-trillion-dollar retirement channel for BTC demand. Headlines coincide with BTC pushing towards all-time high, definitely influencing the price action to go into a new all-time high because it's a full news source. I ignore how much people really can tell whether they want to be exposed to this or not. I suspect that not many people are going to be aware that they are signing up for this. Let me know in the comments. I completely ignore the law. I will suspect that people that want to go for a portfolio in a pension more aggressive, probably they are implicitly signing up for some Bitcoin, in which case there could be some inflows coming in. Number 2, 7 out of 10, El Salvador passes law enabling BTC investment banks. Let's remember that in Salvador is a currency that can be used to purchase things, Bitcoin. Law lets licensed investment banks now to hold BTC and serve qualified clients, an institutional on-ramp that can lift structural demand. And then we have a 4 out of 10 that of course I already mentioned, which is the CME weekend gap that people are extremely bullish at the moment. moment are going to fully dismiss and ignore, as usual. I'm also going to cover the questions from my Patreon members that I asked this morning to see if they want to know anything specific. Let's have a look. How high does the data point that it can go? How does this affect the move from the alts? Then we have, before you leave, please give us a long-term overview of the crypto markets and what strategy to follow during this time. Looks like BTC dominance has bounced off its uptrend line, which hasn't been broken since December 2024. We'll look into that too, hoping that the alts can finally get a rally. We have had rallies, but they haven't been sustained, and also they've been diluted across too many coins. So you see the alts in total 3 move a decent leg up, but your coin doesn't really move that much. I'm also getting a question of what price area do I want to close my short. I can give some ideas of that as well. In terms of this week, we have a few events coming in. Tomorrow we have the core inflation rate on the USA. We have PPI on the 14th of August, and then retail sales and a bunch of another events. Remember, last week we closed the Federal Reserve balance sheet pointing down again. It's been a bunch of weeks that is just declining, but not by a lot. Let's remember that that is considered something not necessarily bullish, but let's also remember that we need to get out of this squaring here. We need to break out for a bullish positive move, or we need to break down to confirm that we are gonna go down. And on aggregated open interest, we finally found support at 37 billion. That was the last line in the sand, pretty much. Breaking below this 37 will have meant a lot for Bitcoin price, will have meant that possibly we are going way deeper. So far we were saved by the bell, and we are sitting now at aggregated open interest at all-time highs. That means around 41.6 billion in aggregated open interest, and we are sitting in August. September, one of the 2 months in past performance, has always shown some red. Some people have a preference to say that that is typically September. I just left August as well on the table, and I left more flexibility for price to decide whether it's going to be August or September. Why? Because in this cycle we haven't really respected by the letter things. Indeed, all this way in here, September was in the green. There were so many months and so many patterns that were upside down that I try to accommodate more flexibility for that and say, well, maybe August reverses and then September is in the green. Wouldn't that be a lot of fun for people? Oh yeah, retail are expecting the correction in September. So just open to those possibilities, not necessarily saying, well, I know the future, because I really don't have any clue about anything. I trade pretty much not knowing any direction. I don't know, and that's why I don't put it in the thumbnails anymore. I don't say up or down. I openly admit not knowing anything. Okay, let's go with CME gaps. Are you ready? Okay, we got one big decent CME gap, okay, and it's located at around 2% down now going in the price. So we really need to move a decent amount, 2.5k. Dan was already explaining that. He was stating that at least we need to break below 120. That means being around here. Let's look at the price in Binance, because the premium on CME is too expensive. So we need to break below this line. He says if we break that line, that was previous resistance, then we are due for a deeper move, and then we can close the gap. Otherwise, there is a high chance that this could turn into a bull flag and we could continue into 125. What's up there at 125? Well, let's have a look. We have the bucket number 2. We are sitting right underneath a huge pool of liquidity. We took number 1, we came back down into 112, we found support with the previous resistance, and we started bouncing back up into bucket 2. This looks to me, if you are interested in Elliott wave, which I'm not an expert, but this to me looks very clear. 1 wave, 2, 3, 4, and we are in the 5th wave, right? That could end at 2, could end at 3. It could take all the pulls and still go into price exploration up until 150k. Is that possible? Yeah, it is possible. It can happen. Is it likely? Well, it will go if we do it within August and we finish it by September. Well, we are flipping all the order at that point of seasonality in terms of price action, because typically we should be expecting to see this around October, November, not August, September. Is quite the opposite usually. But I'm open for suggestions. Bitcoin price? Yeah, definitely. So first hit is at 125. Then we have way less in number 3, but don't get too confident because 3 now, has little, but if we hit 2, there's gonna be a lot of people entering at a short, putting their risk at 136. That's gonna turn that into red in the future. It's not red now, but it could become red, and then price could go for them as well. It will be amazing to see a move into 2 and then closing the gap. That will allow me to find an area in here to add for a third order, although I need to take it a little bit more picky because I already have that order at 116.5 and the second order at 121, and thanks to the 3-to-5 ratio that I happen to have used, my average is 119.5. That means that if I want to add at 125, that might be too close again. So I want to start spreading out just in case, to keep my streak of no losses in 1 year. It doesn't hurt to be a bit more careful. Notice that this bucket number 2, it ends at around 131, which could be another area to add. We already took the liquidity going down of 114. There was this bucket. Now we have this bucket at 107, and we talk about that for a long time, including this period where we were finding support at the previous resistance, but we never took 107, and that is patiently there waiting for an opportunity to be taken. We just don't know if we are going to take further highs before going into 107, but that will be really sweet to take profits from the short. Now we need to take in consideration what happens if we close the first, and more importantly, what happens if we close the second gap that got formed around Thursday. And since I haven't done any video from Thursday, I haven't said anything about this, but we have two gaps in here. The second one from top to bottom is very thin. It's just a hair at 115k. Yeah, 115. This top one closes at 116,900. And I have updated the Bitcoin status since I haven't done any video in a few days. So we got the 4-hour global breakout, daily breakout as well. Not global, but it happened on Thursday. We'll look into the charts, how they are looking. The CPR is about to face the first resistance at 125k, and we have two bearish CME gaps. On the daily, we have a bullish cross that we need to cover, and the weekly closed at the top of the range. There hasn't been a confirmed breakout because on Monday we started climbing above that resistance, but by next Sunday we need to stay there. We cannot count on that yet. We'll look into those charts in just a second. Look at this price action in here on the RSI. It continues to be really crazy, the 4-hour. Look at this manipulative move there of the breakdown on Saturday with low volume, but it didn't succeed. They tried to create a breakdown in the price, but that just served as a retest of this white line in there. The trend line held the price, and it did a big green candle, taking the highs and then continuing for the last order block at the top of the previous all-time high. Very interesting. We're getting very close to that 85 RSI. If you are curious if we can manage now to defend this white line, that is gonna need to move down because we put a fake out to the downside. So the support now is against that point, and we need to place this number somewhere in here. Let's say 63, and our support now is gonna chase us back up. It's located at 63. This is located at around 85.42, and the global support is still 25. So let's identify those levels. We got that support at 120. So interestingly, if the RSI comes straight to this line and it pinches 63, that touches the 120 that Dan was mentioning, and it takes partially this fair value gap that is huge. This impulsive move here left a huge fair value gap. When you're within a very strong uptrend, sometimes it can happen that you don't take the full fair value gap, just half of it, and that happens to be 120 for the RSI support, which is around this level of resistance. If we place a horizontal line, yeah, that's also around 120, around the 120 that you can see on the RSI in white in here. So we got a confluence there that could be support. It's just a tempting area to find support if the bulls are still strong, if general markets are still showing strength. It's the most bullish one that we can hope for. Now, if it doesn't hold the 120, well, maybe CME gap number 1 is going to be on the table. If CME gap 1 is on the table and let's say we take it all up until 116.9, then I'm in profit again because my average is 119.5. That means that from the time that we start approaching the CME gap, I'm already in profit, and I can trail it all the way to take the first one. If I get shaken out, I get shaken out in a decent profit. If I go for the second one, I can trail it back there. But at that point, guys, we draw an ugly pattern. So I want to show you that once we get into the weekly time frame. The area of point of control is 118.2. Remember, on Thursday, I talked about that level that should be strong resistance. It kept us just for a few hours, a few 4-hour candles in here, and then we managed to get around it. Notice as well in price action what we did. I left you in here this double bottom that had a technical target of 119. We have already achieved that technical target, but then there is a larger double bottom with a neckline at 118, right at the point of control, which we managed to break out around Sunday. We test as support on Sunday, and we are on our way to the technical target of 125. Well, guess what? 125 is the largest pool left on the top end with the most concentration of shorts. So do we have a chance we go there? Yes, definitely. Are you counting on closing the CME gap before that happens? Oh no, I'm open for this to go to 125 and even to the top of the range that currently is sitting at 130. Oh, what are you gonna do? Well, we need to think where we place our third order for a short if we go there. Where? Somewhere between the technical target and the top of the range of the 4-hour could be a great idea, but of course I don't leave limit orders in the exchange. I usually look into the charts before doing something. I also check my email because I get tons of notifications of how the slippage is going, how leverage squeeze, longs versus shorts, bid-ask ratio, and if I see, well, I got a good handful of things that are looking for a reversal, then I say, well, yeah, it's a technical level, let's use it. Otherwise, I say, not interested. I'm gonna wait a little bit longer to add. And that's how you can trade without having a damn clue of direction of the price next. It is a trap, guys. Don't try to forecast price. Just try to assess probabilities, chances that things happen, and then reduce sizes to manage your risk. In my opinion, is the best way. Better than DCA, better than stop loss. Volatility on the 4-hour is already starting to print some signals of we are very overextended on the 4-hour. We're getting to the global resistance, which we can definitely pinch and go higher than that. This is not a stone ceiling. This is wood, and we can break it and pinch and start forming a channel to the downside. CPR level. All right, let's remember what we say about the CPR model last month. We said that we hit the second resistance, so August, contrarian to the seasonality, we should have a good chance to hit the first resistance too. That is located at 124,300, and we have done a good amount of that. We spent so many days inside the pivots, but around Thursday we managed to turn it into support. Can Bitcoin fail to test this resistance and then go to the first support? Well, yeah, that happens. We just have a good chance to get there. We don't have anything signed on paper that says, oh yeah, it's all yours. Nope, it can fail and you can go to the first support at 106. That 106, I remember, or maybe it was 107, had a lot of confluence. So we are now currently delaying going into 107, and I have no damn clue for how long. Right, so going now into the daily time frame, you can see that over the weekend we broke out from the middle of the range from 50 without having done a full reset into 24. So this is less quality than if the daily fully reset into 26. That's just a humble statement, not something saying, okay, it must fail, because I don't know if it's gonna fail. I'm just saying less quality than testing the bottom. All right, and we have a second consecutive day pointing up, so that is also good. And the top of the range on the daily is around 85 RSI. That is currently priced at 142.9. Look at how the RSI is coming down as we gain momentum. The faster we go, the faster this comes down, and it meets maybe at 130 if we start going exponential. If we go slow with pullbacks and it's a bit more zigzaggy into the top, well, we could push this into 150 or higher. So the way we land there is also important for the momentum to forecast where it meets with the price. Now we are still in a bearish pattern, and the top of this ascending wedge is 125. And I have said that there has been previous patterns that are bearish. I don't remember if this is the one, or maybe maybe another one that I saw before, but there has been ascending wedges on the daily or maybe on the 4-hour that ended up breaking out to the upside, contrarian to the forecast of the pattern that states, well, most likely you break down from the bottom. So we have corrected this line from here to accommodate for this fake out, and now we know that breaking down below 117 will put the price back again in an ascending wedge, breaking towards the lower end. If we get to 125 and we close above that, we close one daily candle at 127, we are getting a breakout to the upside from here, and I really don't know the technical targets of an ascending wedge when you break out from the top of the range. Let me know if you know that better than me. I just don't want to make up a story if I don't fully know it. And on the daily, the MACD is putting and confirming a crossover in here. I think it's pretty much confirmed. I mean, we can look at the close yesterday. At that point, it was not confirmed. Today is confirmed, but we need to close like this. I think pretty much is for granted that we get the cross. What I don't take for granted is if this is really gonna get into 85 or not. And on the weekly, we were monitoring that we were constantly within this range. Then we had a breakdown that met with the previous resistance. We did not go into the bull market support band. My expectations is to do it in August and September, so I have my 4 eyes, yes, because I wear glasses, that's what they say in Chile, looking at the bull market support band for a potential area to meet with the price in one of those 2 months. I am paying attention if this is actually going to move all the way to the upside. Let's remember that I have this measurement in here that I place in here to say whether we're going to achieve it. But since this seems to be a wave by itself, I prefer to do something different now. From this high, sorry, the other way around, from this low into the high and then into here. Let's say that 112 was the low, then the next wave could end at 137 and the golden pocket is 153. That is based on this being a bull flag by itself. Let's do the previous one to see if it was achieved. So this one was pointing at an extension of 1 of 136, but it couldn't get achieved. That means that this is rolling over, it's losing momentum so far, right? So this was an impulsive wave that should have gotten into 136, 37, but it didn't. Then we started forming another bull flag closer to the one before, and it's pointing to 137 again. So let's see if that can do it, and hopefully for the bulls this doesn't end up turning into something like this. Hopefully we do go into that area, and cross fingers that that happens in August, September. Otherwise you could see in this area in here the typical shake out before the typical October-November rally. And volume continues to go lower in here. It's crazy how we continue to put new all-time highs and new swing highs, and all of this at the cost of bearish divergences against momentum and against volume too. On the weekly, you can see that we put a bearish cross. Recently, that was end of July, and so far we are still with the mouth slightly open. I suspect that if we go for that all-time high and we close there without any deeper rejection, we're gonna end up confirming a bull cross, and then we might stay there. My preference is that we go for that all-time high and the price then corrects back down. That could be 125, could be 130, but then it corrects deeper, allowing for this to have a cool down. That kind of resonates with what we were having in here. This is August in 2021, same previous cycle, but same timing, and then you have this depression, and from October, from around here, you recover and you go back into the top of the range. Maybe we have something similar like that. Weekly resistance at the moment, the first one is at 128. Keep those numbers in mind for making decisions and for contrasting with your own data and doing your own research. What's going on with the longs and shorts and leverage squeeze? Well, after these 3 signals, if you enter carefully each one of them with the same amount, you will have been in profit anywhere below this one. Therefore, you will have enjoyed a run up of 5% plus. Now we are getting the low quality sell signals in here, similar to these ones or similar to those ones in here. Last week, there was a ton of panic sellers around the 1 on the SOPR. My last video was precisely about that, short-term holder panic. They were literally selling crazy amounts of Bitcoin, and if you've been watching the channel, every time that the SOPR hits those very low levels of percentile, we get some bounce back up because it becomes too good of an opportunity to buy RSI from weak hands dumping into the market. So far with the move up of the price, we are not seeing this SOPR move up. That means that there hasn't been a lot of profit taking, or at least the indicator has an update. But if it goes into these stops around here, again, that could indicate that we are closer to a local top. And last month we managed to close above 70 on the monthly. Now we are in August and we are giving a reading of the RSI monthly of 71.16. So if we hold August like this will be the second month in a row with over 70, something that we have never done this cycle. I'm talking about 2 consecutive months above 70. Price of Bitcoin has really been chickening out every time. Like in here 1 month, in here 1 month, this one is below 70, then another month and below 70. So hopefully we get 2 months in a row. That will be really powerful. After all, Bitcoin owns bulls to have some green sustain above 70 like every other cycle. This cycle, yes, there are institutions and everything, but they keep the RSI very low so far. And my top bottom indicator, which I'm not gonna take the time to explain it, you can watch old videos or ask other members, but this indicator has so far never failed, at least never on the top end. On the bottom end, it failed once in the whole history of Bitcoin. So I still respect it and a lot. We are currently at 0.14 and we should be expecting a top if this plays out again at 0.28. And where is that in the price at the moment? Well, currently it's 140k. So that doesn't mean that the price has to go to 140. It's just saying that if we get there, it might be a very high risk to bet that that's going to hold without a pullback, because pretty much all Bitcoin history, the momentum has been declining and helping us to spot those sweet areas for get out of the market. And to be fully honest, I have a few times taken advantage of that indicator, and sometimes I did it just partially, and I wish I did what the indicator said every time, because I will be way richer if I did. But I prefer to challenge indicators. I never use a single indicator to take all my decisions, because that will be silly too. Of course, it's nice to look back in time and see something that has played out all the time, but that doesn't mean that the next time it will play out, the model could break too. We've been through a period of weeks of heavy deposits of large holders into exchange. So you are warned, they have the finger in the trigger and we don't know when they're gonna distribute or at what price they're gonna feel like is the right time to sell. But they have it in the exchange. There is enough there for a correction of over 10 to 15%. Indeed, these ones in here, eventually they did the distribution and it cost multiple times between 30 to 20% in this cycle. So watch out with what they can do with that. The short-term holder realized price continues to climb now into closer to 106. That's getting very close to the 107 that we keep talking about. There's been 3 days in a row of inflows into BTC and 4 days on Ethereum. We are in grid at 70. We didn't confirm the sell signal on Cerberus. We were saved by the bell on Sunday with another move on a weekend, pushing this back into not sell yet. And short-term liquidity pools, let's have a look at how everybody is placed at the moment. You can see that we didn't go for the bottom end. Remember, on Thursday we were calling this area more the pros. Why the pros? Because they are trading with 10 to 25x. They are not trading with 50 to 100x. When you get a pool that is primarily populated by high leverage, it doesn't survive very long. And this was not the exception, because the 50 100x just got hit at 120, and this level at 107 didn't get hit, at least not yet. Let's look at if we add the 10x, then there is a lot of longs there that are pro. 10x know their crap much better than the 150x. And I will say eventually they're gonna close profits and they're gonna attract the price into this level once again. But what we don't know if is they're gonna do it after 130, after other levels, or if you're gonna go straight away into 107. Now, if we were to go into 107, or if we were to go into the second CME gap at 115, what happens? Let's see. Let's imagine that hypothetical scenario. Even if we go high into 125 and then we come back from there and we close the first CME gap, you can see that this will look a little bit toppy, right? If we have to do it in this timing, that will already look toppy. Now, let's say we go to the second CME gap into 115, more or less by the dollar. Well, we get 90%, 80% of a double top. If this happens with bearish divergence, happens, well, that adds up to the story. Now, if you go into 107, well, what do you want, right? So then you get a in-your-face end pattern, huge. And if you get into 107 and you break, then you get a huge target down into 90K. I'm not calling for this. I'm just hypothetically imagine how does it look this for other traders that tend to get emotional about seeing these things and can give us better opportunities to enter longs, and it can allow us to take a shit load of profit from the shorts as well. If we don't get that, that's fine. But it's good to have a plan. Let's remember that 106 is the first support on the CPR. To be honest, the SOPR is not up yet. Leverage squeeze hasn't yet print another yellow signal, so there might be a little bit of extra room. Ultimately, I don't know, and I don't care either. I don't care about forecasting the price. I care about reading probabilities so that I can take profits. We have in the 3-month a decent liquidity pool at 126K, and then it starts declining into 131. So that's kind of the distribution at the moment of the liquidity pools. But if we start zooming out, we're going to see that those pools are not that big anymore. They used to be when we were hitting 100K and 110K. Now they are large. They are the largest on the top end, but they are definitely not the largest across top versus bottom. You can see in here, for example, 83 now is taking the lead. Let's go into the 30-day. On Thursday, the last time we saw this chart, 120 was on the top end, and it was the largest one that we needed to keep an eye on. Thanks to them being so degen in terms of the shorts and using so much leverage, we talk about 50 to 100x, we went for them. Now, on the 30-day, the largest pool is 111 or 112, followed by this area in here of 115 that overlaps with the second CME. And on the top end, we have a decent concentration in here that ends at around 124. These are fresh shorts because this tracks only 30 days. Let's have a look at the order book in here. You can see that we have some levels on the top end, 124 and 130. Brown whales have been responsible for the move up. Purple whales, after a very quiet week, all this week they didn't do anything. They started becoming active around the 9th, 10, and 11, and they're still holding there at the highs. It is not like they're really going mental. The brown whales are going mental in terms of the trades, but the purples are exposed, but not by a lot. Let's look at Market Monkey Terminal. Let's see the distribution of levels at the moment. They are defending 120. There's big liquidity there. After that, they want to defend 117.6. Let's remember that 120 was an important level to defend. So they are doing their job there. Let's see if they succeed. If they don't, then they have this last resource at 117.5. If they lose that level, then we are on the lower end of the point of control. That's where things get very slippery and we can enter CME gaps and all of that. But until then, 120 is still holding. Let's see what's going on in spot. Remember, the left-hand side is perps, futures. This area in here are orders on spot. They really want out at around 125 and 130. That's where they want to distribute spot, and they're interested in buying at 110. We have tons of liquidation pools below the price form all this way up. So far, we are taking just a few of them. You can see just the tip of the iceberg in here has been taken. Now we are challenging that 120, but they're trying to defend it. We have to be fair. If they fail, they're gonna take a big bunch on here. No one knows how deep it could be, but you can see the placement. There's all over the place liquidity pools. Longs at the moment are stepping back down. As the price went up, they started closing and closing and closing. Now it's sitting at 42. Not very low though. It can get into 28. Like for example, in this pump in here, they pull out little by little until they bottom at 29% of longs. So there's still some headroom for price still to go up thanks to having still 42 of them instead of very little like 29. Ask versus bid is completely upside down compared to the past week. You can see that in deviations across the board, we have multiple levels in green. We just have a little bit of red right next to the price. That means that there are more orders to sell where we are than to buy. But if we go deeper than 2%, let's say 2 to 5, 5 to 10, 10 to 20, or 20% and lower, the bidding is at the moment a lot heavier than the ask. That is also very easy to observe in the heat map. You can tell in here that the 10% has heavy defense, the 5% heavy defense, with the percentile now located at 100. So they are really defending that 5 to 10 and not that much the 1 to 2, which is still a 62, 68 is good, decent enough. Definitely impossible to claim that we need to get that pullback and win with a short. Open interest spike at 120, and I suspect this has an update. So let's see, now it's coming to chase this 119.8. The open interest increased very high at that point. The delta is extremely high with 867,000. That makes up, as we said before, for a lot of liquidations in case we started seeing a long squeeze. And in terms of fair value gaps, guys, we have so many, and I did this analysis on Thursday looking for where to reverse from here, and we talk about this after taking these immediate fair value gaps, and we say, what if we don't go for the 121 and we could have reversed into all these levels, but we didn't. I'm really surprised that we took the point of control and really went straight for the 121 in August. Now that we have done it, we don't have any fair value gap or any justification coming from fair value gaps to continue, because this will literally turn into price exploration. Now, if we want to form any bearish patterns like a double top, we have all these fair value gaps in here up until 114.8 to form the first top of a double top, which I'm not taking for granted yet. There are some signals that are saying, well, we could continue a bit higher, and we have this liquidity pool sitting right here that is very difficult for market maker to ignore the opportunity to take it now. And let's have a quick look at general markets before we go into Bitcoin dominance and into altcoins. The DXY continues to push on the weekly. In terms of momentum, the actual price action looks very damping here. Every time we get closer to the top of the falling wedge, which is a bullish pattern, we get a rejection. I say that we could go even lower into 96 with a decent likelihood. Of course, we can break the all-time support. That is not for granted that we are going to hold it. I just think that that support is likely to hold. And if we break out from there, we could see the dollar make a move into the 50s. That, with the timing of getting some correction in September or later in August, might rhyme, and we might be able to take advantage of that. Gold, let's have a look, because we confirmed the breakout in the previous week in here. Then we put a second consecutive move up for the gold in the direction of the breakout, and this week we are doing a big retracement that is caused by this red engulfing candle that is battling with the middle line in here at 3.350. Ideally, if we want more upside for gold, we want to get bought up in here and try to reclaim this, so this doesn't look like a red engulfing candle. Neither we want to close below 3.3, and we want ideally this momentum to start moving back up and closing anywhere above the previous low of 61 RSI weekly. Otherwise, we are calling for a breakdown. Gold being bullish means that people are scared in general, and with the all-time highs of Nasdaq and closing the market like this on Friday, that definitely had an impact in the momentum that we were building with gold. VIX came back down below support after 1 week where it went really high and reclaimed. That was really bearish for the market. So now we are still in this area of indecision. Nasdaq put almost a new all-time high in here. Let me see. Of course, in different listings, it's gonna show different numbers, but let's have a quick look. The close of the previous week, the high was 23,589, and last week we closed at 23,619. And if we go for the current price, it's sitting at the all-time highs right there, but that couldn't manage to put a new high on the momentum. So the momentum now needs to continue up and take the previous high. Otherwise, we could build in here a pivot down, which could potentially bring in a bearish divergence on the weekly. We already have plenty of them forming in here and a curving in this area. So we continue to push the price, but not the momentum. The momentum is not so far confirming that move. Same for the S&P that closed very, very, very close to an all-time high, but not the momentum. Let's have a look at the altcoins. Look at the altcoin season index is at 41 at the moment. As I say, we are building a bullish flag in here. You can see it also in the altcoin season index. So if Ethereum behaves and Bitcoin stays around these levels, or even if Bitcoin pushes into new price exploration together with Ethereum, that is just a lot of liquidity that can spill into the altcoins. Now, do not make this mistake of thinking of having over expectations for altcoin season. There are a few elements that are here to stay, and they're not gonna change. It could be more bullish than the previous altcoin seasons that we have this cycle that were really crap, right? That just 10 days and then a huge dump right after. It can be better than that, but it's not gonna be like 2021. That's just my my humble opinion. Why? One, dilution in altcoins is just mental. There is just too many coins and they're all competing against each other. So you see moves of altcoin season from 10 to stupid 55 and no one can take really advantage of that because your altcoin just moves 5 to 10%, where the previous cycles everything was more squashed. Therefore, it was not rare to say, oh, I got a 10x, oh, I got a 15x, well, that's crap, I got a 100x move in my coin. Well, now we are talking about, oh, I got a 3% and stuff like that is really disappointing. So it can be better than that, but it's not gonna overnight get into an altcoin season when all the altcoins move 10x's and 20x's. So if you hear and you read that in your tweeting timeline, make sure that you stay mentally healthy and delete those accounts. Another reason is Ethereum. Ethereum is gaining a lot of traction, is growing fast, but you need to think, where is that flow at the moment sitting? And the answer is pretty much here in spot ETF. Is that liquid enough to produce the best altcoin season ever in history? Not at all. This is sitting under 10 keys in one of these: BlackRock, Fidelity, Bitwise. Do you think that once they accumulate enough Ethereum, these people that have this cash here are gonna trade it in a strong altcoin season? It's not what it used to be. 4 years ago in an altcoin season, everything was in a wallet on Ethereum and it was being swapped directly in the hands of the trader to other coins that were really liquidly pumping all over the place, those 10, 20x's. But now it's sitting here and I have my doubts that it's gonna move out of there into your preferred altcoin. So watch out with that. Good news, because we try to reclaim the neckline on the USD against the total 3 dominance, which would have been really bearish. But we got a rejection. On Sunday, we came back down in here. So now we are in the territory of potentially reaching our targets of 20% and 16 again. That is bullish for all coins. If we stay like this is not a signal, not a call for, yeah, go mental into your altcoins. You're already allocated from the worst prices, the cheapest, I mean, when things were bleeding and you are sitting in profits, you might consider maybe after you do your own research to hold them for longer. There could be some additional upside. If you're sitting on your hands and you're looking for an entry, you probably deserve a slap in the face. I will say maybe the move is to flip some Ethereum slowly and steadily into the coins that you believe in, or flip for short terms Bitcoin into some altcoins slowly, being prepared for a potential, dark September. And then you get profits and you rotate back into Bitcoin and you do these kind of things. Now let's look at altcoin season. Let's continue to see if it's still looking healthy or not. I guess that's the most important thing. Well, we were looking for a rejection somewhere in here. We gave ourselves some flexibility to re-enter the pattern, to be slightly inside and see a rejection. Okay, good for us, because pretty much that is what we got. We got a rejection, this point back up, back down. We are now in the territory of continuing with the downside. My worries, how could the party end in September? If this ends up in the next 3 weeks closing like a double bottom, this could bleed a bit more inside. Bitcoin dominance going up means that anything, Ethereum and anything below it, suffers. Now, if this next week closes with a new low, then we kind of invalidate any potential bearishness in here for the alts. So far, this is looking good, but it's a weekly candle and we are just in the first hours of Monday. But you know what to look for, particularly if I don't put many videos, you can always rewatch this area. Volatility to the upside already peak, dominance already seeing that rejection from the red line. Hopefully we start breaking below the 60% and start heading into the 50s again for confirmation and for clearing out the awkwardness of a potential double bottom forming in there, because that can bring back the dominance into bullish territory. And let's remember there is a potential to go into 70 if we reclaim the RSI pattern in here. Yeah, we reclaim this and that would be really bullish if we do it significantly, and then we have a target of 70 RSI with 70% of Bitcoin dominance. Good news for the people that are following with the fractal of 2021 in USDT dominance, because this is currently doing some pressure in here to break the lows, and that is going against this expected move up, which will be into a bear market, right? So if we start moving this way, we're kind of invalidating the fractal, which is bullish for all coins. If we start following the green path in here, that is the path into a bear market. That is what this fractal is currently calling for. Ethereum dominance managed to break the 12% and now is halfway through into the next resistance. resistance, which should be 14% Ethereum dominance. So far, we haven't gotten any retest of this. For example, in this breakout, we broke out in here, we managed to get into 70, and from 70, we came into something that we could call a retest into 45. Now we are getting into 68, very close to getting into the area of 69.87, just maybe 2 points away from that. And if we were to make a move down, let's say we go into 49 for a retest, what did that to the Ethereum dominance? Well, it pretty much made it pump 3.7 points and then coming back down into 225. So that was a move from $282 into half, so like a 50% retracement in the price. It's an old cycle, but just to have a point of reference, because this is a breakout of Ethereum dominance from 2021. Very impressive. When it comes to the Ethereum price that we need to track, because it says a lot about Bitcoin, it says a lot now about the altcoins, and we are seeing the breakout from the trend line confirmed the past week. Sorry, this is the monthly. It's even more important. So on July, we closed the breakout. We confirm it. We retest in August. We've been at 3.3K. We came down there, and now we are back above it, and we are above the resistance in here on the monthly at 62. If August closes like this, we are getting a breakout from 2019 RSI all the way into 2025. This is 6-year-old breakout that we could be confirming by the end of August. If August rejects this line and we are still below 61 and we stay around there, that's still bullish. If the rejection is ugly and we go below 50, that's another beast, of course. All right, I'm gonna do a wrap up, and I'm seeing already that we are on our way to test a 120. So 120 short term should be a strong support. It's a first line of defense that in the order book is being defended as we speak. There used to be 2 levels, now there's just one that is defending that level. As a bull, I will cross my fingers that 120 holds for continuation of immediately going into 125. If we lose 120, we can still leave 125 on top of the table. We have still 117.5 to defend. We could go into the CME, and then if we react very quickly after going there and it gets bought up and we push again into the highs, well, very likely that we're gonna see 125 this week too. It's just that with every level that we break below, if we stay there, if we don't react quickly, if there's not a lot of appetite to buy the dip, then the risk is to build a double top. At the moment, I'm close to being in profit in my short. My average is 119.3, so maybe 1,000 away from being in profit, and I'm not planning to add very close to this area because we could enter a bit more of price exploration in here, get into 130. At that point, we're gonna face some other levels of resistance that are also very important, and probably 4-hour and daily are gonna start building channels to the downside, which we really need to manage carefully if we get there with the short. But to be fully honest, I am, as I explained myself millions of times, I am not chasing the answer to where the price is gonna go. I am chasing the answer of whether we are sitting at an extreme, at a rare occasion, at a cross of multiple things saying the same thing. And I'm open for those overcrowded elements saying the same thing to be wrong, in which case I look for a new accumulation of signals somewhere else at another price to increase my position. And at the moment, we have a chance to, again, take profits, closing some gaps, taking some fair value gaps, or taking out of the way the excessive liquidation pools. If we do it, great, another win. If we don't, we continue with the plan. Thanks so much, guys, and I hope you appreciate the video. I tried to cover everything that you asked me. There's a chance that tomorrow I might be able to put out another video. Let me know in the comments if you want another Bitcoin video, or if you prefer a group of altcoins. I can also do that, just not to leave you fully in the dark. But then there's gonna be a few days that I won't really focus on charts that much, apart from just my short if I still have it. Thanks so much, and I'll see you on the next one. Bye bye.